There was some respite in the market today, and that pretty much defines the session. So a breather, which was pretty much reflected in a relief rally for the indices, closing above about 1% higher, above the 7,400 mark for the Nifty. So pretty much snapping the three-day losing streak for the markets. Welcome to Markets Tomorrow right here on ET Now, the Mumbai News Centre. I'm Tanveer Gill, and let's quickly round up the market action in our key headlines. And really, like I said, it was all about the Nifty rebounding above the 7,400 mark. That was a clear highlight. What was also important was to see what happened on the futures and options side. The options activity indicated that the range has been narrowed to between 7,400 to 7,500. So, there was a fair amount of put activity at the 7,400 mark and a fair amount of call activity on the 7,500 level. So that band pretty much becomes a narrow range for the market in the near term. Aside of that, of course, in terms of individual movers, and those aspects will also come up on the screen. The fact that you had Reliance come out with numbers in key earnings, beat street expectations on the back of strong GRMs. Remember, the stock, of course, saw some profit taking ahead of numbers. So, another aspect that the markets would react to in tomorrow's session. Let's see how the stock takes to it, because the rally last week on Reliance was fairly strong. But like I said, stepping into earnings, the stock had a rebound a bit. Aside of that, there was, of course, if you take a look at the futures and options side of the market, only 18 F&O stocks traded with losses in the session today. L&T, Axis Bank, which comes out with numbers tomorrow, and Tata Motors led with gains. And, within those key leaders, you had Axis Bank, which gained ahead of earnings. Keep an eye out for Axis Bank. The stock gained 5%, a very strong show stepping into the earnings session tomorrow. And Axis Bank, from a one-month perspective, has lost nearly 25%. So don't really believe too much into that rally in the session today. That could have been a dead cat bounce, given the way the banking sector has performed of late. The question of the day then is whether this rebound rally on the index is sustainable. And we have Mayuresh Joshi joining us on the fundamentals and Mitesh Thakur on the technicals to assess the market mood as we step into trade tomorrow. Good evening to both of you. Mayuresh, I'll start off with you. How much are you buying into this breather the markets got today? Or are you reading it just as that, after so many days of volatility, just a step back, so to speak?
Evening, Tanveer. I think nothing has changed overnight, right? And again, if you look at how Brent has been behaving over the past few weeks, it's a clear indication of how the dynamics are going to get governed in terms of how the Brent pricing might pan out. Clearly, I think the Chinese GDP data that had come out in line with estimates, but clearly I think it is pointing to a slowdown, and IMF estimates again are pointing to a Chinese slowdown coming through. So clearly I think the global concerns related to how China growth will pan out, what happens to crude, still remain an overhang on the markets. And domestically, again, as time and again I've pointed out, I think it's the domestic corporate earnings that will provide a key re-rating for the markets, which you don't believe are expected to improve anytime soon. So clearly I think lack of earnings visibility, lack of the capex cycle reviving anytime soon are going to keep the markets probably in overhang. So clearly I think the markets are expected to be soft. You might expect bounces onto the markets that we've seen like the one that we saw today, but clearly I think the overhang on the markets will continue for all these factors.
Mitesh, we've spoken about the market rebound at length. Your sense, do you think this trade above 7,400 is sustainable?
I think there's a fair good chance of that happening. We've been extremely oversold trying to bounce back. And as long as 73.50 holds, I think there's a good chance that we'll first attempt 7,500, 7,520 on the upside. And if we start getting past that, then, you might get into a zone of around 75.80. To me, it does appear that it could be sustainable given the fact that the Bank Nifty, which is a key component of the Nifty, I think that's where we have seen, again, a similar setup, extremely oversold readings on banking stocks, the Bank Nifty index itself, and trying to bounce back. Typically, these kind of pullbacks can be slightly sharper, as we saw today. They come with their own share of volatility. But I think in the short term, if somebody is trading with 3 to 4 day kind of bias, maybe there's a possibility that this bounce back will be extended. And of course, 7350 now becomes some kind of an important stop loss.
Okay, Chairman, stay on with us. Let's just quickly get an important market voice, Shankar Sharma of First Global, highlighting his view on how he sees Nifty at 7,400 and where the markets are headed from here.
My view is that, and my view has been that India is going to be really a Jekyll and Hyde market in which large companies will struggle to deliver numbers as we have seen. Smaller companies will obviously do better because they have smaller bases and they can be quicker to take advantage of whatever limited growth options are there in the economy. So in times of turmoil, they're good places to be in, which is why, and that's been historically, last 20 years, you can see that has generally been the case. So I think they're okay buying IT. I don't think you're going to make 50% a year anymore on those. But I don't think you're going to lose 50% in a year, and most of the larger ones anyway.
All right, that's Shankar Sharma sounding a note of caution even at these levels for the markets going ahead. Let's focus on key earnings, and in tomorrow's session, all eyes will be on Reliance Industries aside of Axis Bank as the numbers came in post-market hours, beat street expectations. There was a big outperformance on the GRMs, which was expected, so that number of $11.5 to a barrel was something that the street was working with, but it is an outperformance. They have clearly come out with a strong GRM number. In fact, keeping it with those earnings, here are the management on how they reflected on the quarter.
In terms of gross refining margin or GRM, we had a 7-year high of $11.5 per barrel as compared to just $7.3 a barrel a year ago. Fuel oil, on the other hand, strengthened a bit due to higher bunker demand, but all in all, it was a good environment for buying crude around the world for complex refiners. It is the year in which our projects at Jamnagar and other locations come to completion and startup and completion. It is the year in which we expect our digital services initiative to get to the market.
Let's go straight across to Ajay Sharma, who joins in with a quick analysis of the numbers and how the market would take to them. Ajay.
Well, that's correct. There was clearly a refining-led quarter for Reliance Industries this time round. $11.5 is what they've delivered on our lines of expectations. But clearly, it's a very healthy number. There was also a positive surprise on the petchem side, which was otherwise expected to be slightly on the sluggish side. But they've come out and delivered very healthy EBIT margins, both on petchem and refining. So it was a standout quarter. Of course, the other segments of the business has also started, contributing meaningfully. Other income was very strong. That also, takes away a little bit of shine from the net profit, which was much higher than what the street was estimating. The management believe that the refining end of the business and upstream end of the business has contributed, and the trend and the momentum looks very strong. So most of the analysts we've spoken to do indicate that there could be, a good reception of this kind of a, performance from Reliance Industries this quarter. Expectations are running high. They have delivered on the expectations. In fact, let's go across and listen to what the analysts have to say with this kind of number under the belt.
Reliance has been operating this treasury part of the business very systematically. On one side in the balance sheet, they would have the 85 to 90,000 crore worth of cash staying, and on the other side, they would be borrowing money from the global market for a long tenure at the international price of around 2.5% or so. So from pure point of view, if you look at it, I think this company is trading, taking the advantage of the spread at a lower cost of funding from overseas, and I think the higher wide deployment in the Indian market. And that is where I think they are making more amount of money. That is not surprising. This is continuing for a good period of time. I think the Reliance Jio business would be the profit contributor and significant profit contributor going forward for Reliance.
We see some upgrade in the stock because of this higher other income. There will be some upgrade. I think for annualized basis, Reliance can do around 85 to 90 rupees of EPS. And it is also subject to how the GRM trends during the Q4. So far, if you see the trends, the gasoline crack, which has been running at around $20 per barrel, and it has been one of the important factors for driving GRM, apart from the heavy light, the discount that they have been enjoying. So I think 85 to 90 is reasonable for the full year. Though the next year number, FY17, there could be some blip because of the losses from the telecom business. As soon as they launch sometime in March, April, the losses will accumulate over the FY17.
I think this is a very, very good number, and I believe they'll be able to maintain that a little more than they'll be able to maintain the refining margins, which seem more commoditized and has been increased largely because of plant shutdowns and in the global refining space. Petchem, they have a slightly better hold on things. So I hope that continues.
This time it was largely in line in terms of GRM as well as the bottom line numbers. So maybe my sense is that the price is already factoring largely this kind of number. So the kind of stock reaction that we had seen last quarter may not be this time.
Okay, I just want to bring up the 7-day chart of Reliance Industries. The price action ahead of numbers. Last week, it was the strongest performer in a falling market, really held out with Infosys, so went all the way up to 1,080 odd, and from there has come down. So on balance, the 7-day chart would reflect just about 1.5% gain, but the swing has been a good $80 on Reliance Industries. Mayuresh, where does the stock story go from here? Given the numbers and given that the markets are largely stable, do you see the stock opening higher tomorrow?
So clearly, I think Reliance has been working out on expectations of an higher GRM coming through. I think bang in line with what we were probably presuming at 11.5. Petchem is something that has really surprised the street. So at 14.4% on the EBIT front, clearly higher than what a lot of analysts on the street had envisaged. Clearly, I think the other income component as well, I think it's a consistent trend that you're probably seeing with Reliance, and it's managing its treasury book very, very well. The throughput at 116%, I think record high levels again. So clearly, I think with new capacities expected to come through from the first half of FY16, you're going to see probably the margins sustainable. I'm not saying it will really be sustainable at 11.5, but again, I think if they normalize around these levels, I think you're going to see a huge amount of bump up happening on the EBIT and the EBITDA front for Reliance, and significant improvement both in terms of cash flows and the ROEs, which are basically compressed because of the 1 trillion rupee expense that they've probably taken on the telecom part. So clearly, I think the performance has been excellent for Reliance operation-wise. So clearly expect the stock to do exceedingly well over the 1-year time horizon. How it will react tomorrow, probably a lot has been played out into the price in my opinion. So if it comes lower tomorrow for any reason, I think it becomes a good opportunity for long-term investors to actually start accumulating the stock.
Mitesh, your sense in Reliance, how do you expect trade to pan out technically?
See, a disclaimer here, I personally own the stock, so there's vested interest. I do like the stock. I think it appears to have started some kind of a longer-term trend in the last few weeks. And as long as the stock remains above levels of around 1,000, I think the medium to long-term trend will still point on the upside. I think what we've not seen is Reliance giving a monthly closing above 1,050, 1,060 band. I think that's an area which in the last couple of years has been tested on multiple occasions, and the stock has failed to sustain about that. So I think getting past 1,060, and we are now getting close to the month end as well. I think if we can end January about 1,060, 1,065 levels, I think then I'm looking at targets close to about 1125, 1150, which would happen in the next 6 to 7 weeks. And then beyond that, I think even further targets can be tested. So I'm quite positive. I think this from a medium-term point of view, I think that it remains an accumulate. From a trading point of view, I think in the short term, I think the risk-reward equation is not very favorable. So anything around 1,030, 1,025 is an excellent entry point.
Okay, great. Jemin, stay on with us. We'll head into a break right now. That's Reliance's earnings and the likely impact on the stock when we open trade tomorrow. But when we come back, we'll also focus on Axis Bank. That's another set of numbers the market will be watching out for very closely. Get you a preview as well as some analysis on what to expect. Okay, and key earnings to watch out for tomorrow. As we pointed out before the break, it's all going to be about Axis Bank. The top gainer in the session today, 5% higher. But the 1-month chart would reflect the kind of price erosion the stock has seen, which is close to 25%. And many on the street believe that if there's a surprise in the earnings, then that would be a good entry point seen for the counter. That's, of course, the kind of pain that Axis Bank has seen over a period of time reflected in the stock price erosion as well. Yatin joins in with a quick preview on what to expect from those numbers. Yatin.
Well, for the third quarter, we are looking at Axis Bank, which is likely to report a 15% growth when it comes to the net interest income, which is seen at close to 4,150 crores. As far as profits are concerned, we are looking at a figure of 2,085 crores. That will be again a jump of nearly 10% year on year. Of course, most of the analysts are of the view that there could be some asset quality stress for the infra portfolio, as well as on the metals front, wherein we are looking at general stress at the banking level. So that is a key monitorable according to the analyst community. Net interest margins are expected to be dipping by nearly 6 to 9 basis points on a quarter-on-quarter basis. As far as credit growth is concerned, we are expecting a 15 to 20% growth for Axis Bank. Of course, the key factors to watch out for in Axis Bank third quarter will be the management guidance for the asset quality stress, net interest margins and the loan growth that they see going forward in lower interest rate regime. Also the comments on the RBI directive to recognize various stressed assets, and also the kind of restructuring that we are looking at in the 525 recast. And the most important point would be the figures for the asset reconstruction company sales, the kind of loan sale that we are looking at for ARCs. That will be important data point for Axis Bank to watch out for.
Oh, yes, indeed. I was just talking about the kind of price erosion the stock has seen over a 3-month period, not 1 month period. 1 month it's been down 9%, but over a 3-month period, the stock is down close to 25%. Mayuresh, if the numbers, give a positive surprise, if things are looking stable on all fronts, would it be a compelling buy for Axis Bank given what it's done in the session today?
Well, yes, Tanveer, again, I think it is at compelling valuations after the steep correction that we probably witnessed in the stock. And yes, I think most of the factors that Yatin was talking about in terms of NIM compression, because there has been a 35 bips base rate cut in the early part of October, which effectively means that 82% of its domestic funds are linked to the base rate, which means around 10 basis points can get easily shaved off when NIMs are concerned. However, I think asset quality is going to be a key important factor. What probably happens in terms of the 525 restructuring, what is the slippages ratio that has probably come down, and again clearly what kind of an outlook the management probably gives in terms of the restructured book for the better part of FY16. Having said that, I think we've always envisaged a higher credit cost of around 90 bps for Axis Bank. We continue to maintain that. The valuations remain extremely attractive. So we remain optimistic on the stock. If it performs and delivers, I think you might see a good reaction on the stock in tomorrow's trade.
Right. Mitesh, same question to you. Given the price damage the stock has seen, and for a large cap marquee private bank like Axis Bank, do you think that the tide could be turning after today's 5% gain?
See, I think again the stock has been extremely oversold, and along with other stocks, I think it's trying to bounce back. Now, typically, I think, you play these oversold stocks by identifying some kind of reversal levels. I think it's already done. First level of around 380. The next one is at about 395, 397. I think once it crosses that, there should be some more strength and possibly spillover of, the kind of movement which you're seeing now. And we might look at a trading rally extending up to about levels of 420. We still don't have a signal of a short-term or a medium-term bottom being formed, but yes, it is reversing from oversold levels. I think a trading bounce back is what looks very, very likely. So beyond 397, look for 420 as the short-term target.
The next lot of earnings, which will be important for the market, will be Ultratech Cement. Vivek joins in with a quick snapshot of what to expect. And low raw material costs could boost profitability this time around, Vivek?
Well, the cement sector has been a relative underperformer in recent times, and analysts are expecting a muted quarter from cement companies this time around as well. Now, Ultratech, which has been a relative outperformer, is coming out with its numbers. And looking at the preview, on a standalone year-on-year basis, the revenues are seen up around 5.8% at the 5,800 crore mark, while the adjusted net profit is seen up around 28% at the 465 crore mark. Now, the margins are expected to come up around 220 basis points at the 17.7% level. Now, looking at the volume growth, growth is seen in the range of 6 to 8% on the back of utilization ramp up in the existing facilities, while the lower raw material costs are seen aiding the margins. Finally, the pricing pressure, especially in the north and east regions, are seen having an impact on the realizations as well. Back to you.
Thanks Vivek for that. But Mitesh, that very question for a ranked underperformer like the cement pack and Ultratech within that, do you think the charts are indicating any sort of rebound?
Not yet. I think Ultratech or the other cement stock, I think for the time being, while they are slightly oversold, we don't have a signal of a strong reversal as yet. But I think, in case the stock was to start getting past levels of around 26.80 on the upside, then you might have a trading bounce back led by some short covering, and 27.30, 27.50 could be tested.
Mayuresh, your sense on Ultratech? Yes, there could be a boost in volume growth. Margins could expand because of ease on the costing side. But has a cycle turned for cement?
No, clearly, Tanvir, I think there's more expectations again at this point of time. And it's more expected that over the next few quarters, it will be more volume-led, which will again help in aiding realizations both on the north and east and the west part of the country, where Ultratech basically has its strong points. And clearly that will boost the capacity utilization, not just for the sector, but for Ultratech as well. So clearly I think these parameters is wishful thinking at this point of time. Whether they'll translate into numbers for this quarter and the next, I don't think so. So I think soft quarter expected clearly in terms of how realizations will pan out. Yes, volume growth can be anywhere between that 6-6.5% mark is what we are probably envisaging. But clearly I think the raw material cost savings is going to aid both the EBITDA margin and the bottom line of the company. So increase in petcoke consumption is going to be the key driver for the company, and it's always deriving at higher valuations. So clearly I think we are optimistic on the cement sector from a year and a half's time frame, and Ultratech remains one of our better picks in the top tier cement names.
All right, Mayuresh, thanks for that. Before we wrap up, Mitesh, very quickly help our viewers with approaching trade tomorrow with your stock ideas, stock strategies.
Yeah, I have two short-term buy calls. The first one is a buy on Apollo Hospital, which had a good reversal. That's a buy with a stop at 1384, look at targets of 1455. And a buy on Sun Pharma, where I would recommend buying with a stop loss below 780. And in the short term, I will place a target of around 822 to about 825 on the upside.
Okay, gentlemen, thanks very much for joining us and making sense of the markets, also helping our viewers with your analysis and trading ideas for tomorrow. That's a wrap on the show then. We leave you with another important market voice. Nimesh Shah of ICICI Prudential AMC is confident that FY17 will be a good year for corporate earnings.
It's a mix of Russia, it's a mix of Brazil, it's a mix of India, China, and all these countries have got nothing to do with each other. So finally the concept of emerging market itself has been questioned, and that's a good thing. Eventually that will happen for India, because confidence of emerging market going down, at some point of time people will invest in country only funds. So we are waiting for that to happen, and I'm confident that will happen at some point of time. Mid caps are overvalued vis-a-vis large cap. The PE ratios of mid caps in every industry are higher than the PE ratios of large cap. So one should move more and more towards large cap regulated utility segment, where because of regulations they are expected to earn 14 and 15% as soon as they create a fixed asset. So I feel that's a good segment to invest in this kind of volatile markets. Private bank segment, I think it's a good segment to be invested in. I would strongly urge your viewers to create a 5-month, 6-month systematic investment plan into whatever you want to invest in equity over the next 1 year.